Hey, happy Monday, folks. Matthew Buckley, the Chief Investment Strategist here at Wealth Creation Investing. And another big week on tap, folks, as we get ever closer to this impending fiscal cliff. And obviously last week just continued the clown car and the comedy of errors with the Obama administration essentially firing a broadside of nothing but taxes and an increase in spending and stimulus and about zero in the way of entitlement reform. So I get that negotiations, you never start where you want to end, but starting at a position that's offensive and just ridiculous kind of demeans the whole process and really hardens the resolve of the other side. So really not looking forward to what's going to happen with the fiscal cliff talks. Actually, let me rephrase that. I'm looking very forward to what's going on because as an options trader, I love the increase in volatility. I love what's going on in the market. Now, many retail traders probably don't, but I do. So let me get started here. Let's talk about our strategic mindset, folks. Over in the Middle East, Egypt and Morsi, not the singer from the 80s, but the new Muslim Brotherhood president. New constitution full of Islamic themes and Sharia law themes, just bad news for us. So obviously Mubarak, the enemy you don't know is a lot worse than the enemy you know. So Egypt's really in a bad way, folks. And last week, in case you missed it, of course, it was on page 812, and the media didn't cover too much because they don't want you to know about this. But the UN, that august body of problem solvers, voted to give Palestinians a non-voting member state status, essentially equivalent to the Vatican. That makes sense. And guess why they did it on November 29th? Because back in 1947, I believe, that's when the UN mandated or split the Jewish and the Palestinian and created the state of Israel. So kind of funny how they did it on November 29th. That doesn't help out at well. China still kind of chugging along there, still seeing some headwinds. We have some long-term bullish, short-term bearish positions on China that we're monitoring. The EU, folks, last week, really bad news. Joblessness up to new highs, 11.7%, which is the highest unemployment rate on record in Europe since 1995, since they started keeping track of unemployment in Europe. And you know what's pretty interesting? It's in the blue states. So let's take a United States reference. Anybody see that map of the United States recently, the electoral map? It's all red except for some blue pockets. Well, yeah, all that red has to pay for that blue, right? So Portugal, Italy, Greece, Cyprus, all those folks are the hardest hit. Spain, for example, the unemployment rate's at 26.2%. Greece up there, 25.4%. Italy, not as bad, but still 11.1%. So none of that is good news. So a lot of problems overseas. And obviously, folks, like I said, we have our own domestic clown car with the fiscal cliff discussion. As of the close of trading last week, November 30th, second month in a row that we've seen a decline in the market. The Dow lost 71 points in November. So starting to see a little bit of a trend here. And speaking of Morsi and Egypt, looks like our president, Obama, is trying to do the same thing. He has slipped into, and this really hasn't made the news, well, actually probably has, they just don't report it, that President Obama is trying to slip in legislation to make it more difficult for Congress to block any increases in the debt ceiling. Isn't that great? So King Obama wants a credit card with no limit. Folks, yeah, you can't make this stuff up. And like I said, the media aren't reporting it because they don't want you to know that, because it's just absolutely incredible there. What's on the flight schedule for this week, folks? A lot of economic reports this Monday that came out, and that's kind of why we're seeing the market wallow around sideways here, because we're seeing some porridge reports this Monday. Manufacturing PMI and ISM PMI. I know manufacturing PMI came up a little higher, but ISM came in a lot lower. Construction spending, little increase in construction spending, but ISM manufacturing prices also going down. So manufacturing starting to slow down a little bit, and that's really never a good sign. Tuesday, we're not seeing too much in the United States, but some overseas news that probably won't be market moving, but get ready, folks. The biggest thing that happened this week, and it's more Friday, but it will get hit on Wednesday with what? ADP non-farm payroll. It's that time of the month again, folks. Remember, for the past 3 months, the monthly unemployment report was ginormous. Why? We had an election coming up. So any slight uptick or decrease was, fodder for 500-pound heads and all the talk on Comedy Central. So get ready. On Wednesday, we'll get a preview of at least what ADP thinks, and also some ISM and factory orders as well on Wednesday. Thursday, obviously, we have weekly unemployment claims, which have been hovering north of 400 or around the 400 level recently. So we'll see how they come in, and also some news out of Europe over there, some revised GDP numbers. But Friday is going to be the big one, folks. So make sure you're kind of glued to the TV there. Employment rate, non-farm payroll, and also average hourly earnings, and then University of Michigan consumer sentiment. That's going to be a big one. But average hourly earnings, folks. Why am I watching this one? Because last week, what happened? A couple months ago, what happened? Personal income went down and spending went up, and I called it, folks. I said that ain't going to last. I'm a political science major and a former fighter pilot, so I might be a caveman, but the math doesn't work on that. We're making less money, but we're spending more. You can only do that for so long, right? And last week, it finally caught up to us. Personal spending went down, so did personal income. So let's take a look at average hourly earnings. That's going to be interesting to see there, folks. They're calling for a slight increase. I'm looking at a slight decrease, okay? So how's the market going to react on some of this data? It's going to be very interesting to find out. Going to be an action-packed week. Like I said, the market's kind of sold off on some porridge news today. Not too hot, not too cold. And we're wallowing around here, folks. And again, we're going to be lost in this desert for the next, call it 28 days, okay? As the fiscal cliff talks, they really haven't started in earnest, folks. I can say they haven't started in earnest. You can say, well, Timmy Geithner marched on over to Capitol Hill and gave his term sheet to McConnell and Boehner. And negotiations don't start when the first response is laughter. Senate Minority Leader McConnell laughed at Geithner's proposal. That's not a good thing. So when it starts with laughter, you know that this is going to go on for a little bit, okay? And if you read my blog last week over at Top Gun Options, you know that I actually think the president wants us to go over the cliff, to be honest with you. He's going to throw Republicans under the bus. He'll get the revenue that he wants, and he'll get everything that he wants, and then maybe down the road he'll look magnanimous in victory and maybe give a little bit on entitlement reform. Either way, folks, we're in for a long haul here. It's not funny. It's interesting how Europe, from Greece and Spain and France and all these countries are trying to run away from the same exact type of system that we're running to. Forward, as the president would say. Okay, I'll see you tomorrow for our Tuesday sit rep over at Top Gun Options. Happy hunting and make sure you hedge.